The world is drowning in numbers that almost sound fictional. The United States carries more than $36 trillion in debt. China follows with roughly 15 trillion. Japan exceeds 10 trillion. Across Europe, the United Kingdom, France, and Germany each owe several trillion more. Every major economy on Earth is buried in debt. Add it all together, and the number becomes almost impossible to process. Global debt has surpassed $317 trillion. That figure doesn't mean much on its own, so let's put it into perspective. All economic activity on Earth combined, everything humanity produces in a year, is only about 1/3 of that number. Global debt is now more than 3 times global GDP. Even if the entire planet stopped consuming food, energy, housing, and services and worked only to repay debt, it would still take years to catch up. Which brings us to a question almost nobody asks. If everyone is in debt, who is the creditor? Debt doesn't vanish. Every debt exists because someone else owns the claim. If governments, corporations, and households owe hundreds of trillions of dollars, then someone, somewhere, holds assets worth the same amount. So who owns $317 trillion in claims on the world? The answer exposes the largest wealth transfer mechanism ever created. This isn't about secret meetings or hidden cabals. It's about structure, a system where the majority borrows and a minority lends, where interest compounds continuously, and where debt is mathematically impossible to fully repay. To understand why, we need to rethink what debt actually is in the modern economy. Most people think borrowing works like this. A bank has money. You borrow it. You repay it with interest. That model no longer applies to governments and large institutions. When modern governments borrow, the money usually does not exist beforehand. It is created at the moment the debt is issued. Governments issue bonds. Banks and central banks buy them. But the money used to buy those bonds isn't taken from savings. It is created digitally, through accounting entries. No vaults, no transfers, just numbers added to balance sheets. And here's the detail that changes everything. Only the principal is created. The interest is not. If $1 trillion is borrowed, $1 trillion enters the system. But the obligation is larger than 1 trillion. So where does the interest come from? From new borrowing, or from extracting money already circulating through taxes and fees? This creates a permanent imbalance. There is always more debt than money. Because interest is never created, old debt can only be serviced with new debt. Debt must expand continuously. If new borrowing stops, interest payments fail, and the system collapses. This isn't a flaw, it's the engine. So who owns the world's debt? The creditors fall into 4 main groups: central banks, institutional investors, foreign governments, and the ultra-wealthy. Let's go through them one by one. Central banks hold tens of trillions of dollars in government bonds. They allow governments to spend beyond tax revenue and stabilize crises by creating liquidity. Interest paid on those bonds flows back into the financial system. Central banks sit at the center of the debt structure. They don't end the system. They enable it. The largest share of global debt is held by institutional investors, pension funds, insurance companies, asset managers, sovereign wealth funds. These institutions appear to represent millions of ordinary people, but control lies with management and ownership structures that are heavily concentrated. The economic benefit flows upward. Some countries lend to others. This happens through global trade imbalances. Export-heavy nations accumulate foreign currency and reinvest it into other countries' debt. But these assets are controlled by governments, not average citizens. The benefits remain concentrated at the top. The final group is the smallest and the most powerful. Ultra-wealthy individuals and family offices hold massive bond portfolios. At extreme levels of wealth, safety matters more than growth. Interest becomes income without labor. Money no longer works to survive. It works to extract. This structure is not new. In medieval Europe, religious institutions were the lenders. During the Renaissance, banking families dominated. In the industrial era, private financial houses rose to power. The names changed, the mechanism didn't. Those who lend accumulate wealth without producing. Those who borrow produce, but remain dependent. Because debt is never fully repayable, the system requires perpetual expansion. That's why global debt has exploded over the past few decades, far faster than real economic output. But exponential growth always reaches a limit, and when it does, only three outcomes remain: default, inflation, or large-scale debt cancellation. History shows that no matter which path is chosen, the burden falls on workers, savers, and the middle class. Those with diversified assets and global reach adapt, and often emerge stronger. Debt crises don't destroy inequality, they accelerate it. During expansions, interest flows upward. During collapses, assets are transferred at discounted prices. Homes, land, businesses, everything moves toward capital. The global debt system is not broken. It is functioning exactly as intended. It extracts wealth continuously, quietly, and mathematically. Every mortgage payment, every tax dollar used for interest, every price that includes financing costs, all of it channels value from the many to the few. So if everyone is in debt, who is the creditor? Now you know. A narrow global elite operating through institutions, markets, and balance sheets. And as global debt continues to grow, the real question isn't whether the system will change. The real question is, who will still be standing when it does? If this helped you understand who really owns global debt, subscribe.